Breaking news on Wall Street. You are seeing the opening bell be rung. U.S. stock futures plummeted this morning as President Trump's sweeping tariffs announcements are sparking fears of a global trade war. That opening bell is starting trading day at the New York Stock Exchange, where nervous investors are waiting to see how this all plays out. Starting this weekend, a 10% baseline tariff goes into effect on imported goods from all foreign countries. Next week, about 60 countries will be hit with even higher levies. We've got NBC News business and data correspondent Brian Chung here with the latest on this breaking news just as the markets open. Brian, look at this number. Just walk us through exactly what we're seeing this morning.
Yeah, it looks like 2.7% is how far down the Dow Jones opened up as of just a few seconds ago. That's actually not as bad as the 3% just a few minutes ago when I was looking at it. But I mean, Savannah, this is moving really rapidly. I'm looking at the other markets that have opened as well. Again, the Dow that you're looking at, that's kind of the top 30 stocks. But the S&P 500, which is largely seen as a more kind of comprehensive, broad-based measure of the stock market, is down, it looks like 3.3% at the market open here. And the NASDAQ, which is kind of that tech-heavy index, that is down pretty steeply, 4.4%. Wow. So all this is happening after kind of just the staggered markets that we saw in Asia and then in Europe open and then close. And actually, when you take a look at what was going on in Japan, it looks like markets there closed down by almost 3%. In Europe, I'm looking at the DAX, which is in Germany, that closed down by over 2%, or actually still trading right now, down 2%. So this is just having ripple effects across the world, and it's understandably because these tariffs that were announced by the White House yesterday cover basically every country with that minimum, that floor of that 10%.
You mentioned the difference there even between NASDAQ and the Dow, but which sectors, which big name companies do we anticipate feels the sting of these tariffs immediately? Yeah,
well, look, I mean, when you talk about tariffs, we're talking in many cases about goods. So any sort of company that makes, hard goods that are exported or have, cross-boundary aspects of their supply chain production, that is going to be hard hit. But Savannah, you bring up an interesting point here, which is that you look at the NASDAQ, that's a tech-heavy index. And a lot of people might be thinking, well, why is it the case that a stock like Meta or a stock like, Google would fall in response to tariffs on hard goods? I think it speaks to the broad-based concern that investors have. Yes, it is indeed the case that Google or Facebook aren't manufacturing the types of items that would be subject to some of these levies on these countries around the world. But nonetheless, if you're an investor, you're worried about the economy. And there were a number of economists just last night in the response in hours after the announcement in the Rose Garden that were saying the R word, recession, not just in the United States, but there were economists that were also warning of tilting into recession a number of economies around the world. So if this is kind of the lowering tide for economic growth around the world, then you don't want to be in risky assets like stocks right now. And that's a big reason why we've seen relatively quote unquote safe assets like gold rally. We've seen the price of gold surge in like double digits. It's over $3,000 per ounce as of the last check that I saw. So again, investors are really going into kind of a bracing pattern for what could be perhaps an economic slowdown.
Yeah, you mentioned the way that it could impact global economies. Just walk us through a little bit more just global markets. I mean, I know they nosedived earlier this morning, but how has that progressed throughout the day?
Yeah, well, look, when it comes to the Asian markets, they are closed right now. The European markets, I believe, are maybe an hour or so away from closing. Depends on what market you're specifically looking at. But when we talk about the tariffs here, you can't look at it in a vacuum. It's not just singularly the United States is making it more expensive for importers here in the United States to bring something in from the European Union, to bring something in from China, where, by the way, the tariff rates effectively are going to be 54% because they stack on top of the 20% tariffs that were already put in place prior to yesterday's announcement. But you also have this question of the not reciprocal, but the retaliatory tariffs that other countries will take against the United States by slapping any sort of extra tax on things that they import from the United States. So that can make things more expensive in the European Union, in China, in Vietnam. So this is just the beginning of this tariff war, and that's the reason why we're seeing global markets react negatively to this as well, because they also have the uncertainty of what their governments and their countries will do in response to the Rose Garden announcement yesterday.
Not reciprocal seems to be a key here, given the fact that that's not exactly the right way to describe what it seems the math is shaking out to be.
Yeah, an important point that you bring up there, because what President Trump did when he showed that kind of chart physically in the Rose Garden, he was using these numbers and said this is the tariff that other countries charge on the United States. You can see it, all those blue and white numbers on the left column there. Those numbers, as we kind of looked after the announcement, were basically put together by the U.S. Trade Representative's Office. And account for the trade deficit with the country that is in question there, it's not actually the tariff that those countries charge on us. Without getting into the calculations there, essentially it's a cooked up number. So the Trump administration is claiming that those are tariffs and that we're reciprocating it on them. But again, those numbers that you see on the left column are not necessarily the exact rates that those countries charge on American goods. So important point there.
U.S. dollar also hit a 6-month low today. Just talk broader economy.
Yeah, well, look, when you talk about Forex, that's the foreign exchange markets where you have the U.S. dollar trading against other currencies. There is this question of if the United States is not going to import as much because, well, you have these tariffs that are going to make everything more expensive, then that's fewer U.S. dollars that are flowing around the world, right? And if that happens, that tends to weaken the U.S. dollar. Now, in a vacuum, that's not necessarily an issue for people that are buying American goods in America. But when you talk about the kind of global trade flows, dramatic changes in foreign exchange rates can really lead to huge choke-ups in financial markets. So you do start to think about the financial industry. I wouldn't be surprised to see banks are part of this potential sell-off here as well. I have to look sector by sector as we are still processing the market action in the first 5 minutes of trading here. But again, Dow down 2.7%. That's going to include basically every industry.
Brian, I think people at home seeing these headlines, listening to us right now, it's pretty scary. Obviously not a great day to look at some of your investments, but what is the one thing you want viewers at home to keep in mind today and the thing that you're really kind of focused on looking at?
Well, I think that when it comes to people who are looking at their 401ks and they're looking at their stock savings that they have for, a retirement nest egg, they might be freaking out here. But I just want to remind people that over time, if the idea is to hold on to your stock portfolio so that you can cash it out, 20 years from now, try not to look at this.
Bump in the road.
Right. It's a bump in the road. And, generally markets tend to go higher if you look over a long enough time horizon. But in the short term, we are definitely in for a bumpy ride. And I think that economists that I've been speaking to and market strategists, I was on the stock exchange floor when the first round of tariffs against Mexico and Canada were announced. They were all saying that, until we get more certainty on the tariffs, this could be a slide that'll continue. I don't think we're any more certain about the tariff policy today than we were yesterday before the Rose Garden announcement. So for that reason, this stock slide is probably not going to end here today. But I think that if you're holding on to it for 20 or 30 years, the idea is that, okay, just hold on to it and just ride it out. But if you're day trading, certainly you're getting a lot of, motion sickness from seeing what's going on in the markets right now. But it kind of depends on what your strategy is. When you buy stocks, there is kind of that implicit risk that you're taking. But this is just kind of part of the news cycle that we're living in.
All right, Brian Chung, thank you very much. You're going to stay with us because we are going to keep our eye on the markets. Of course, your money tell you what it means for you throughout the morning. But for right now, the news continues.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.